Hello, and welcome to another episode of Building Success, a real estate podcast. My name is Nick, and I'll be your guide as we talk to some of the best and brightest in the worlds of real estate, tech, operations, and financials from across the globe. This podcast would not be possible without listeners like you, so if you like what you hear and you'd like to hear more of it, please think about subscribing on iTunes or Apple Podcasts. And more importantly, leave a rating and review because that helps other people also find this podcast. Today, I'm speaking with Dror Poleg. He's the founder of Rethinking Real Estate, also has his own podcast called Dislocation. And today we talk about the digital transformation of physical assets. And so all of these different assets around the globe, there are many ways that they're being utilized for purposes other than what they were initially intended for. And we go into the WeWork model, shared co-working spaces, ways that the design of buildings have changed to cater to the needs of the renter, the buyer. Really lively conversation, all started and stemmed from an article I read of Dror's that stemmed from a conversation he had at PropTech and Pizza. So we also get into pizza and how pizza has made a digital transformation as well. So hope you enjoy this episode. And without further ado, here is Dror Poleg. So I am joined today by Dror Poleg. He is the founder of Rethinking Real Estate. Thank you, Dror, for joining me today.
Hi, Nick. Pleasure to be here.
And before we even get started, I did just want to mention right at the top of the show that you have a podcast as well on the topic of real estate innovation called Dislocation, where you speak on hot topics back and forth with David Friedlander. And before we get into the topic today with Rethinking Real Estate and with Dislocation, you mind giving me a brief bio of what's brought you to real estate tech?
So I started my career in the digital world, actually in the kind of placemaking world. So producing nightlife events and parties on the beaches of Tel Aviv in Israel, where I grew up. And through that, I started getting into the digital marketing and design world. So to promote events, I started building websites, designing flyers. And then I started doing it for other clients and became kind of a one-man agency and then a multiple men and women agency. And from there, I went to Australia, started a small agency there, then did that in China. And while I was doing that in China, I was working on a lot of real estate projects. And I'm talking here like mid-2000s, so about 13, 14 years ago. And one of those real estate clients kind of sucked me over into their business. And I started working for a large developer over in China. And we were building shopping malls and office buildings and service apartments and condo residential. And I started on the kind of digital marketing side and very quickly moved on to oversee the leasing and then to deal with acquisitions and then to deal with negotiating loans with banks and, to sell our vision and story to them. And ultimately also just negotiating exits from our assets with large institutional investors that we would either partner with or sell our buildings to. And in China, doing retail and generally real estate, technology was always a big part of our business, like both in terms of things that we needed to understand, mobile payments, location services, the disruption of retail, the changing nature of work, millennials, and, which there are like 420 million of in China and going on 500 million, I think in like 15 years or so. And a few years ago, 3 years ago, I had a crazy idea for a startup for a location-based social network, an app that lets you talk to anyone who is within immediate walking distance or within the same building as you or within the same music stadium or sporting stadium. So I built that, and that's what brought me to New York. We had some early success with it, but ultimately not enough success.
So explain what that is, Dror. What was that technology?
So it was an app that once you open it, you see conversations from people that are within half a mile or less from you. So it's something like Twitter, but only for where you are. So it's not about your friends. It's not about your interests. It's not about kind of collecting data on you to decide what interests you. It's just a tool that allows you to amplify the experience of being where you are. So you just open it and you see who else is there, what people are talking about, what business offerings are available, but only offerings that are, again, right now within walking distance. So not like, oh, let's take it, here's a 20% coupon or something, but more like, oh, we just have a free table right now, and if you can walk over within 3 minutes, then you'll have a table at an amazing restaurant that otherwise you have to wait for forever. As I was exploring that, I kind of realized that I'm stumbling back into real estate that I couldn't escape, and that's beyond the kind of narrow use cases that we were toying with and the small clients that we were dealing with, which is mostly local business owners and small kind of street shops. There are bigger issues here that impact larger property owners. And then I decided to really research that and, enhance my expertise in that space, which is something, that I've been doing for like 15 or 20 years, but like to really focus on that. So I took a few months off and I put the startup in the freezer and I wrote this kind of basically thesis about the impact of technology on large scale real estate owners and operators. And I put it online about a year and a half ago. The document is called Don't Think of a Building. And that reached so many people, I think about 50,000 by now. And they started contacting me and asking me for help. So both large institutional investors or property developers, and on the other side of it, different technology companies, mostly early stage ones. So that's how I got into where I am today. And I guess I can tell you a bit about what I actually do today as well, but maybe you
Yeah,
have a
no,
question
please.
about that. So today I run a consultancy called Rethinking Real Estate. We're based in Manhattan, in New York. And we do three main things. I mean, we focus innovation in real estate. And again, I'm not using the word technology on purpose because a lot of the innovation is more around business model and business offering. Uh, and we do three main things. One is executive education. So we do workshops with executives from large private equity funds, real estate investment trusts, large developers to really bring them up to speed on all of the different things that are happening in the industry, new technologies that are emerging, new operators that are, that are making waves, and helping them understand the implications of these things on their business, providing them with frameworks and roadmaps and kind of methodologies on how to even assess the implications of these things. Is it a risk? Is it an opportunity? Is it something I should buy? Is it something I should copy? Is it something I should ignore? Is it something that I should develop myself? Then we have like two kind of more practical business lines. One involves analyzing large institutional portfolios, usually for companies that manage $10 billion or more, and identifying opportunities to add value with the use of technology and innovation. And adding value can be, immediate things like, oh, you guys should start using MRI, so you should install some sensor that's going to cut your energy costs, or reduce theft or something like that. Or it could be much better initiatives like, oh, in 5 years, 20% of your portfolio should be furnished, offered on a flexible basis, and then you should offer free coffee every morning, let's say, stuff that is much softer and less about technology and more about really transforming the core business of these real estate owners. Some of it is even more kind of structural and financial than that. So I mean, looking, let's say, at a real estate LP, so like let's say a pension fund that usually invests in private equity funds that then invest in real estate. So these funds themselves need to suddenly have new type of people working for them, need access to new types of data, need new capabilities to helping them basically understand what they need to do today in order to be relevant and competitive in 5 years for various reasons, which I think we'll probably touch on later in this podcast. And the third thing that we do, so beyond the portfolios, we also get involved in the due diligence phase before large acquisitions of mostly commercial or mixed use assets. So our clients like to bring us to be around the table next to their accountants and lawyers, the kind of traditional market studies that they would do with someone like, a Cohen or a JLL or a CBRE, in order to bring a perspective that the traditional kind of analysis model doesn't take into account, which again involves identifying value add opportunities or risks that have more to do with innovation and disruption from unusual places, and the stuff that looking at the rent roll or looking at the projects nearby is not going to tell you.
So it's interesting because your company's beyond just looking at tech, looking at finance. I heard you kind of mention the use of how to improve culture as a means of
Hmm.
creating a successful business too, which is probably an overlooked piece. But if it really is about making your employees happy, and that's really the big drawback with your organization, it's good to have somebody who's actually willing to come in and say those things to you right to your face.
Yeah, often people pay us to come in and scare them. I mean, either to scare them or to scare their board or their management. They understand that something is happening, but they need like a second opinion about it, or they need like a more eloquent opinion about it. Uh, and often, as you noticed, I mean, yeah, it involves much broader things that, you know, just, oh, you should install this or you should do that. I mean, people like to focus on that because that's the easy stuff. Oh, what should we install to be innovative? Unfortunately, it's not so simple. I mean, to really avoid the pitfalls ahead and to take full advantage of the opportunity, these companies will have to be transformed in quite a meaningful way.
And so let's talk about some of those transformations. I think that's a good segue, Dror. When we're talking about tech, and actually, I think some of the stuff that I want to talk about is a culmination of tech and culture.
Mhm.
You spoke at an event. I'm not sure if it was one of these workshops that you're referring to, but of all things, it was called Prop Tech and Pizza, and that's really what stemmed my interest in talking with you. Is you really mentioned a lot of transformations that are happening to physical assets with multiple startups and really established companies that are coming to the forefront to elevate the game, so to speak, for businesses, much in the same way that tech has been improving the B2C and the consumer relationship. And what does it mean to you to have a physical asset transform into a digital one?
So the event that you referred to, I mean, it's an event we had in New York City a couple of weeks ago. I did it together with David Friedlander, and it wasn't a private workshop. So I mean, because most of my talks are like, in closed events that for people that pay a lot of money, I try every now and then to just do like an open event that anyone can come and join and, pay $10 and have a beer and a pizza and kind of have a more fun discussion. So in order to make it possible for, young entrepreneurs or for kind of mid-level executives from big companies to attend as well, and not just the board members or the CEOs. And at that event, I started my talk by looking at two revolutionary companies that went public in, I think, 2004. The first one is called Google, and that company, I think, went up, let's say, 1,000% since then. Probably you've heard of it. And the other revolutionary company is called Domino's Pizza, whose stock went, I think, about 2,000% or something like that since then. And actually, pizza and Domino's Pizza in particular offers a really interesting case of how you can take a very traditional, very kind of conservative, very hands-on physical ingredients-based business and transform it with a digital strategy to create amazing value and more value than even a company like Google created, which is completely asset light, has amazing margins, uh, etc. And real estate obviously is in a position to enjoy the fruits of digital transformation as well. So we looked at a few different things that are happening. I mean, one is the fact that co-working is no longer just for kids. I mean, it started as something that was for freelancers or for that dreaded word again, millennials, or something that is a fad or like a marginal business. And today we see that it's actually moving to serve much larger customers that sign 2-year leases or 5-year leases and have 200 employees or 500 employees. So it's not no longer something that you can ignore. And most of these co-working companies are very tech powered or even digitally native. I mean, in terms of their site selection, the way they reach customers, the way they manage their bookings and they manage the actual spaces, and the way they track how the spaces are used and then iterate on the product. And by product, I actually mean, the actual real estate. So, they change the furniture, they change the layouts, they change the materials, they tamper with the air quality based on how they see uh, that it impacts actual users. So kind of methodologies that are very common in the digital world, like when you build a website or when you build an app, it's a never ending process, the development. I mean, it's not unlike in real estate where, there's an architect that designs the space, it delivers it to the developer and touches it up a little, then delivers it to, the operator. The operator brings in a tenant, and, the architect would never have anything to do with that space again. The developer probably not so much either. And the operator will come back, when the air conditioning is not working, or when the elevator is broken, or when, it's time to sign the lease again in 5 or 10 years. And now we see that kind of digital mentality of actually constantly iterating, constantly gathering data, constantly using new tools in order to offer a better experience, which is starting to take hold in the real estate industry. Part of it is driven by the fact that the product itself, I mean, what it means to have an office space, let's say, the product is becoming more and more complex. So if in the past you just needed, throw in some furniture and maybe put up some partitions, and then you're good for the next 5 years, today you suddenly have to put in all sorts of sensors and management software of various kinds, and access control system, meeting room booking systems, and air quality monitors that more and more employees are requiring. And all of these systems are it's becoming very, very hard for me as a tenant, unless I'm a real estate expert, to actually figure it all out by myself, even if I get a consultant. So I need someone to deliver it for me. And that someone has to understand these technologies really, really well. And it's also, this is driven by technology in a couple of other ways as well, just in the fact that the nature of work itself is changing. I mean, people are much more mobile, even if they work in an office. Their work usually, the work that humans do these days involves much more creativity, much more kind of spending time with other people in different kind of setups. So not necessarily sitting in one spot. So again, requiring movement, requiring coordination, requiring digital tools. And even more broadly, the nature of business today, things are changing so quickly, and will probably change even more quickly now once AI really becomes a major factor, and automation, that even if you assume that your business is going to do amazingly well, you have no idea how much space you're going to need in 5 years, because it might, being extremely successful might actually mean that you need much less space because you'll have less employees. So, if in the past business was stable enough to allow companies to sign, 10-year leases, today it's becoming much harder. And again, that's in the best case scenario where the companies are actually doing well. And on the other side of that, there's the fact that, the birth and death of companies, the rate at which that is happening is also accelerating. So companies don't spend too much time in the S&P 500 these days as they used to. So if you look at the pace of change in the last 10 years compared to how it was 30 years or 50 years ago, the list over there is much, much less stable. There's so many things happening. I can go on forever about this.
What I find interesting, Dror, is that it kind of reminds me of the seller's market, buyer's market. For the WeWork specifically, it's the renters market versus the rentees market, and that these companies are trying to find ways to lure in these small businesses that are now turning into some larger organizations, going to places like WeWork. And I had a talk on my last episode about these multifamily tech amenities, and it seems like that's happening now on the commercial, these offices and pieces too, based on your article, that there's a lot of companies that are offering these digital amenities now to try to lure in top businesses or top employers.
Mm-hmm. Yeah, so in the residential space, you see more companies that are, doing anything from just managing access and having virtual doorman that connect to community portals and allow you to book all sorts of services from other businesses nearby, or even services from the building itself. So companies like Hello Alfred, which kind of turns every building into a kind of a concierge building, that you have people that can come and put in your groceries in your fridge. Or there's another company called Doorbell over in Boston, which is more of like a kind of community activation / engagement company that kind of you can invite into your building, and then they give your residents an app, and then they make everyone a little more involved in the community, which reduces the tenant churn, and turns the building into something a little more pleasant than the building next door. or another company called Carson, which has like a hardware software solution that takes non-dormant buildings and adds kind of, both like a virtual dormant solution, but also, again, a community engagement solution and a maintenance request solution. And then like little things that make the building easier to manage for the owner and also provides a much better experience for the people um, who are in it. But I think it goes, I think in the best cases, it goes well beyond just amenities. So again, beyond just, putting like a little patch or a little gimmick. The best companies are, it begins with really understanding what the customers want and need, which is a way of thinking that seems very obvious and simple, but it's not very prevalent in real estate. Uh, Real estate generally is very driven by the kind of if you build it, they will come mentality, and the kind of assumption that the fact that we're here means that we're valuable, and we have this empty office space, and we're just going to give this box to someone, and they can do whatever they want with it. We don't really need to know so much about who they are, and we can have a different tenant on each floor, and each one has a different style, and we don't need to worry about these things. Likewise, in the residential world, the assumption was obviously there's some market research going into it, but much less than in a typical technology or consumer good company where landlords build, say, a three-bedroom apartment, and they don't really think so much about who exactly is going to use it and in what way. So as far as they're concerned, this three-bedroom apartment can be used by a family with two kids or a grandmother living with an assistant or by three roommates or four roommates. They're going to build the same thing anyhow.
Hmm.
And now you see new companies that are emerging and are starting to really, fit their product into very specific groups that have specific needs. And by doing that, not only that they can add amenities that people actually care about and use, but they can even eliminate certain things. I mean, they can say, oh, actually, we don't need a big kitchen, or even we don't need a kitchen at all, because the people that are going to live here are not going to cook. And maybe they don't need a living room, they just need an extra room for another roommate, because then that roommate can pay the rent and they can all pay less. And then, they have a lounge somewhere else in the building. It's an amazing screen that they can watch, NBA every evening, which is what they're into. So once you really have a customer in mind and you segment your market and adjust your product to it, then you create a lot of value, and technology comes into that. But again, it doesn't start with technology. It starts with thinking about the customer and understanding who you're targeting and understanding the needs at a detailed level and on a day-to-day basis, which real estate companies don't really know how to do so much.
So talk to me about space as a service. Specifically, the thing that really stuck out to me as just really innovative was the idea of these restaurants not open during the day and these businesses being able to come in and utilize that space. Like not just the actual location and what furniture and what amenities are in the building, but also looking at the time that some of these buildings might be utilized.
Yeah, so we looked in that talk that you referred to. I spoke about a couple of companies. One of them is called Spacious, and Spacious started in New York City, as far as I know, and they take restaurants, usually kind of fancier restaurants that are closed during the day. They're only open for dinner, which means that from, they're only open between, say, 6 p.m. to midnight or 1 a.m. And for the rest of the time, they're empty, and they're empty, but they have beautiful spaces. They have great tables, great furniture, usually pretty convenient locations. And Spacious said, actually, we can, bring people to work here during the day. We just need to put in Wi-Fi and put up a coffee stand. And again, since we can acquire our users digitally, and have a great website, have great online marketing, have a really convenient app that allows people to find us and come and check in and pay us, we can actually start selling, coffee like restaurant chairs by the hour or by the day or through a subscription service. So I think these days they charge about $120 a month, which is very, very little.
Hmm.
And they allow you to have a place to sit every day, and you can go to each one of their locations. I think there's a few dozen locations in New York City, and I think already in a few other cities today. And it's kind of like a co-working solution that is extremely competitive in the way it's priced, and it's a win-win because for the customers, it's a great price. It's a relatively pleasant experience, and it gives them a lot of flexibility and the ability to work in different parts of the city. For the restaurant owner, I mean, they get extra revenue. I'm not sure if the model works fully at this price point, but even if they have to raise prices, it's still going to be probably relatively attractive. The other company I mentioned is called Recharge, which rents out hotel rooms by the minute, basically. So hotels usually have a certain level of vacancy, and more importantly, even if they don't have any vacancy at all, people usually check out. A lot of the customers check out before 9 a.m. and most of the people that arrive at 8 p.m. or even afternoon. And it takes maybe half an hour or 45 minutes to turn over the room, but then it's available for a few more hours. And at the same time, because of the changing nature of work, we have more and more people who are just running between meetings or in a different city and just need to grab a quick shower or a nap or even just go in and jump on a conference call or record a podcast. And they can actually find a hotel room that is dynamically priced, so they can get an immediate price. They can click on a button, walk into the building, open the door, spend time. They can work, they can rest, they can shower. Obviously, they can do some other things that people have traditionally used the hotels for by the hour, but it's probably not priced as attractively enough for these type of use cases. I mean, people that just need that, I think there's already an informal industry that probably caters to that. Uh, and but what it points towards, I mean, both of these things, I'm not saying they're going to take over the world, but they're interesting. But it's part of a bigger story, which is the way in which technology really intensifies the way space is used. So it means that spaces are used for more hours during the day, that more people can use the same space. Uh, Another aspect of it, and again, WeWork, for example, does that really well, that they can stuff a lot of people into a single floor plate. And the average square feet per person that they achieve is around 50, which is like a third or a fourth of what a traditional office can achieve. And they achieve that, again, partly with technology, by designing really well and using interesting materials and providing an experience that is not just about the space that you have, but the other things that happen there that makes it worthwhile to work out of a WeWork. And that does two things. I mean, one, it unbundles the value of real estate from the value of, from the number of measurable square feet. So it means that you can, in theory, like make much more money out of your building and not just have people argue with you about, I'm going to pay only $50 per foot. And then if I get 1 foot less, then I pay you $50 less. So it's not about that anymore. Uh, and the other thing is that it's, in a way, because you have more people using less space, it's also kind of creating new supply, because now there's more space that more people can use. Or, big companies that used to take 10,000 square feet, now they only need 8,000 square feet. So it creates a vacancy issue for landlords that, again, especially for those that are not willing to kind of adopt new models or offering something that their customers appreciate beyond just saying, okay, we have more space to give you.
And so it went from being about how the building was built, and you mentioned that with the actual design for some of these buildings. And then, we talked about the time and being able to utilize the different uses of a space given during times where there's vacancies. But then the thing with WeWork that's really interesting to me too is that it's designed not to squeeze as many bodies in there as possible, but it's given this design where people want to be super close to other people because it's fostering this collaborative nature. There's excitement and energy being built, and it's become a place where people want to have a whole lot of bodies around. So they're actually taking advantage of the design and the culture in a way that can, best utilize the space.
And I would even, I would say even beyond that, they go beyond what happens in the space. So, maybe there's an amazing kind of culture and experience in the space itself, but also the fact that you have access to a network of hundreds of other spaces, or to an online community of other people that you can speak to or buy stuff from or sell stuff to, or that you have discounts at, Equinox because you're a WeWork member. A lot of things that have nothing to do with the space are part of the WeWork value proposition. Which again doesn't mean that the valuation is justified. Maybe that they're going to be overstretched, maybe they're overvalued, but there's definitely demand for what they're selling. They manage to charge people in a way that that prevents these people from thinking in the old terms of, okay, I saw another office next door and they're giving me 1,000 square feet and you're only giving me 800, so I'm going to pay you less. That's not something that WeWork hears very often, So people go there because of the kind of complete value proposition. And if they want it, they pay for it. Obviously, if they don't want it, they don't want it. Uh, and I think we see them investing more and more in those things that are less and less related to the space itself, because probably the density that they achieve, there will be some kind of backlash. And people are gonna, I mean, they keep pushing it and making it more dense. I think at some point people are gonna have enough of that and they're gonna want more space again. And WeWork want to be in a position where they have other stuff to offer beyond just the space, and they seem to be working on that.
And once again, the renter helps to dictate what it is that they want in the industry. Coming
Mm-hmm.
again full circle from the consumer being able to drive what it is that gets produced and what technology is out there for their benefit from a B2C side, it's happening now on the B2B as well.
Yeah. And again, and that is driven by data system, by ability to collect data, to use it efficiently, to understand how it impacts your numbers. So ideally, you want to be an integrated company that has all of these capabilities, not necessarily all of them in-house, but to have people in-house that know how to manage tools and service providers that give them all this information, just like in any other product business. A car company knows how to build a car from beginning to end. It doesn't just give you a horse and a buggy and lets you go, you go and figure out what, where to buy wheels and then how to use it. Like, you get a complete solution, and as I mentioned before, the product of Office is becoming complex enough that it must be handled by professionals that understands all of the different stops in the value chain. Even if they don't manage all of it directly, they understand it and they know how to learn from it, and to keep changing in order to fit their users' needs.
So tell me, Dror, what's the future here? You've given a lot of really great examples of things that have started and popped up, and a lot of these new technologies are already in play. But what do you see as the next step in commercial real estate?
So I guess my answer also will not be not just a tech. It will be kind of a little broader. I think the biggest thing that I'm seeing is that assets are becoming more and more dependent on their operators, especially in the office and in the residential world. So the same dynamics that exist in the hotel world, and to a smaller extent in the retail kind of shopping mall market, are starting to govern office and residential market. And what it means that it's no longer enough to have a great building in a great location. You actually need to have a differentiated operator running that building. So again, just like a Starwood or a Hilton adds immediate value when it takes over a building, and not just because of the way they manage the building, but also because of the value of the network that they bring and the network effects that creates. So it's starting to happen in office. And if in the past you could buy a building and just bring in like a good manager that keeps the building running and clean and safe. So again, bringing in CBRE or Cushman or JLL. Today, you see people like WeWork and like Crane and like Breather and like Notel and like the Ops Group that are coming in and are really running these buildings very creatively, like designing them really well and creating a great experience on how you book and use the space, and creating community and events, and creating symbolic value in their brands, that the people that work in these buildings are, they don't just understand that it's a quality building or that it's run by like a good company, but they're actually almost proud that I work in a work building, or I work in like the office group building if you're in London. And that the people that work there themselves are, they relate to the brand, and they think that the brand kind of reflects their values. That's really high level stuff that, again, traditional real estate companies, even the best among them, don't really cater to. And once these assets are becoming more dependent on the operators, it also means that they're less valuable in themselves, and they're worth more in the hands of people that have these capabilities, which means that the people that want to own a lot of assets need to start having these capabilities, or they have to start selling them to people that know how to run them better. Which brings me to the second thing that I think is a major change that you'll see. Basically, to be a real estate operator or real estate company in the 21st century requires a lot of new skills. So whether it is in terms of design, of how you work with data for your site selection, uh, on how you work with data in order to understand who your customers are and in order to understand how your existing customers use your product. Uh, so again, a lot of new skills. And I think what it would lead to when I look at the market from like 30,000 or 60,000 feet is the emergence of these new ecosystems of sorts that have all these capabilities within them. And, on the one hand, you can see, again, company like WeWork, which is more or less the prototype of like a 21st century real estate company. And that's a company that has in-house data scientists and graphic designers and architects and engineers and community managers and, you know, people with a very, very broad skill set, and they have their own proprietary technology, and they have a meaningful brand, and they have all of that under one roof. And the other side, I think you would see, and they, I think, offer, this is like a closed ecosystem. So it's all within one company. It's a very integrated kind of hardware, real estate, and the software above it. So a bit like the Apple of real estate in some way. And on the other side, we will see open ecosystems where very large investors like Blackstone or Brookfield are both owning more and more assets, and they're investing directly in technologies and in operating platforms and in different tools and in design companies or in design talent to work together in order to compete with the WeWorks of this world. And you've probably noticed that, I mean, so on the one side, you have these very big kind of private equity firms, and on the other side, you have a startup that is financed by venture capital money. And in the middle, there are all these traditional real estate companies that I think mostly are going to struggle to find their footing, and we'll have to work really, really hard in order to remain relevant. And I hope it doesn't sound too grim.
Yeah. Well, not if they keep up with all of the latest trends and really start acquiring those new skill sets in order to compete.
Mhm. Yeah, I mean, I think there'll be room for smaller players as well, but I mean, you should avoid the middle in a way. I mean, you can specialize and do stuff that is unique or is relevant only to the locations that you own, or specialize in a specific category. Become the best at senior housing or like some other group that seems to be growing. But just to try to be just like a run of the mill, even quality real estate operator that just runs kind of office spaces or traditional multifamily, I would say probably not the best strategy. And it doesn't mean that you're going to get eliminated or lose money, but you're just going to see more and more of your upside flowing to other people, which ultimately means that you're going to struggle to make financial sense, and especially when there's a crisis or something like that, more and more assets will change hands and move towards those that can really run them more creatively and take advantage of economies of scale and network effects and data.
And those renters, they have more of the power because they're demanding certain things and certain amenities, and if they're not keeping up, then they're losing a lot in terms of demand on their side.
Yeah, renters have it's the kind of paradox I think that we experience in all aspects of our lives today in this tech-driven world. That on the one hand we become more powerful and we have access to more and more of these tools, but on the other hand, everything that we took for granted or used to have for free now it's being monetized in some way, and monetized whether it is by forcing us to give away our data every time we just want to talk to our friends or send an email or see the photos of our niece or on Facebook, or monetize even more explicitly where stuff that we used to do just as organic social transactions, like borrowing something from our neighbor or taking someone with us as a passenger, is suddenly becoming a proper transaction that someone actually governs and makes money off of. It's a double-edged sword.
For sure. Dror, thank you so much for joining me today. This has been great.
My pleasure. Thanks, Nick.
And if you'd like more information on Dror and his work with Rethinking Real Estate, check out rethinking.re. And that don't think of a building, is that available on your site, Dror?
Yeah, it's available on my site. And I think even if you just Google think of a building, you'll find it.
Perfect. And also, as I mentioned at the top of the podcast, if you're interested in his podcast, and I highly suggest you check it out. It's a great discussion about trends that are happening in the industry. Both Dror and David bring articles and news to the table, so it's a good way to stay up to date with tech in real estate. You can check it out. It's called Dislocation, and I believe soundcloud.com/dislocationnyc will get you to all of their past and present episodes.
Yeah, it's on iTunes as well, and on Apple Podcasts. I mean, whatever phone or system you're using, easy to find.
Perfect. So with that, we will call it a wrap. Thank you so much, Dror, and until next time, we will see you later.